Everybody, Brian here for quantlabs.net. Gonna leave it where I left off from my previous video. Here's the crypto. I went over the new stuff on these Fibonacci levels for stop loss, take profit. So I'm going to go back into my analytics dashboard here, and I'm going to take you into the new charts for stop loss for bid and ask spread cost. Now, this is only available for Oanda because they're one of the larger, I think they're the largest forex broker out there for retail. So let me just show you, it's more extreme in the world of forex itself. So what I've shown in the previous video with a Fibonacci, which is great for entries, for stop loss, for take profit targets, okay? So I've got the same thing in these charts here. You can see it's a lot more opened up historically with forex. So these is more useful for forex, I find. But it's the same concept. Everything's the same. Now, here's the interesting part. If you come down to the bottom, past the reports, here's the most profitable opportunities, okay? I'm going to talk about these episodes. So right now, if you were to track the most profitable, you'd be looking probably at these pairs here: U.S. Turkish lira, Euro Turkish lira, New Zealand Canadian, New Zealand Japanese, and U.S. ZAR or South African Rand. Now, when it comes to the Turkish lira and the South African Rand, people go, well, that's an exotic, you're going to pay for the price because of the spread, blah, 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 blah. That's very true. If I took you to Oanda, so if you go to Oanda, because this is where the data comes from, and just look up Oanda, it's pretty well, I think it's like a live spread cost. So, yeah, right here. This is fascinating, okay? And there's truth to what's being said. You can clearly see here in the world of all these different pairs. So, for instance, we have the U.S. dollar to Czech, 126. We have the British pound and the South African Rand, 261. British pound, the Polish zloty. So these costs can inhibit you in making profit. All right, so we know that. We need to know that. And here's the one example I've mentioned: U.S. dollar and the Rand, South African Rand, 189. And this is where you can go to calculate that. But I mean, seriously, who's got time to do that? So what I've decided to do is in this chart, forex analysis, charts and tables, you can see here some interesting moves. Now, this one is something I have confirmed. These are the opportunities that came around a few days ago. The New Zealand dollar and this bar happened. These are calendar events where the economic news was good and it popped and it spiked. 4 pairs were affected by this: the Swiss franc, Canadian dollar, the Singapore dollar, and probably a few other ones if I look carefully. And you'll also find the New Zealand Japanese yen as well would pop as well. And then it goes flat. You know, typical. And here you can see there's some buying opportunity here along the RSI. This one especially, obviously. And it just went flat. The averages show you that. It's tightened up since. And it's tailed off. It's lost its momentum, some of these pairs. So these are good examples. So now you go, oh, geez, I have to be now concerned about this thing, the spread cost, this bid and ask. Here we have the difference between bid and ask, known as a spread. Well, I've charted that. So we have here the bid and ask in blue and the ask in orange. So you can clearly see that not all the time these spreads do tighten up. We're pretty close. But there are times where right here, right here, the spread seems to drop off. And not only that, but the spread seems to be affected by something different between each pair. There's a different behavior. If you ask me, the New Zealand Canadian dollar, why the spread goes up, is if you ask me if there's a sudden rise in the currency, usually the bid and ask starts to diverge because maybe the sellers want to sell faster than the buyers can keep up, and as a result, the buyers are not absorbing the spread and the difference as the sellers come in when they go into, I guess, a panic of getting out of the currency as it starts to lose value. So you can clearly see which ones are fairly stable. So if I look at New Zealand Japanese yen, what was the cost of it? Here, hold on, New Zealand Japanese yen. So it's fairly tight right here. Let me see another one. I'll look for another one that's kind of disparaging. So here, it's not that tight. You got here, here, and it's not. I don't know how you explain it, but all I can say is if there's lining up of algos and people lining up trades for it's going to pop, it doesn't, starts to lose momentum. Again, it comes back to what I said: the buyers and the sellers want out, the buyers aren't keeping up, and that's the result why the spread seems to happen, because you can clearly see it in these down moves. At least that's how I'm seeing it. That's visually. Okay, so I just want to show you this tool. Hopefully this will help you out to understand what's going on. Yeah, I think I'm hoping it's useful to show you some of the nuances that happen in the world of forex on this spread and potentially how I see it. But again, comment away if I'm wrong. I like to be wrong. Okay, so if we move into the world of CFD and look at the same pattern of the spreads in the CFD, question is, do we have the same situation? I want to also mention that I have filtered out the pairs and the instruments based upon volume. If the volume is really low, I'm not going to list on these charts. No point in doing that. And I quickly picked up on that a few weeks ago. So I only want to work with more higher volume pairs and instruments. Because if you're getting splitting with the low volume instruments, you're going to get killed on the slippage. Okay, so here we are on the spread cost with the HK33, the German 30, and you can barely see the orange line here to ask. It seems to be pretty close to be lined up. Here in the India 50, some discrepancies here. Chinese 50, it looks pretty good. The gold, and I always forget, I think this is gold, but there is some discrepancies there as well. And we come back to the stops and losses I showed earlier in my previous video. Hopefully this will help you out in seeing the spread of the bid and ask, and something that you should be aware of and be concerned about. But hopefully on the forex front, we can tighten up the calls of potential upswings, but maybe get out of the trade earlier, prematurely, to prevent getting caught up in the downtrend when the spread starts to go up, and it's harder to get rid of your positions as they lose and the spike drops off prematurely. So something to be aware of. Okay, so we shall talk to you soon.